Thank you, David. Give me just a second. I'll share my screen. Okay, is everyone can see my screen?
Yes.
Yes, okay, good. So is government COVID-19 response bringing significant amount of new funding, and in many cases, guidance not really available timely. There are a lot of questions regarding compliance and the single audit applicability for this new funding. So it made us to put our single audits on hold until the final guidance is available. So a lot of things that David already covered, and I'm going to revisit some of the points, but mainly I'm going to go over important planning considerations that hopefully will help you with your 2020 single audits planning and point you to the right direction. Obviously, we cannot answer all the questions today, but we hope that it's going to help you to get ready for the 2020 single audit. And as you already noted, there are a lot of changes. Changes to the uniform guidance, changes to the yellow book, and mostly changes around this new COVID-19 funding. New programs added, some existing programs had compliance changes. So the most important task for you this year is to keep your team informed. You need to make sure that you're communicating with your funding agencies and have a full understanding of the compliance requirements of the programs that you are administering to minimize the risk of non-compliance and potentially that may result in findings on your single audit report. The good news for recipients of COVID-19 funding is we were given a 3-month extension. So if your entity received COVID-19 funding as either a new program or addition to the existing program, you have this 3 months, additional 3 months to file your audits. It's an automatic extension. You don't really need to do anything. With the only requirement that you need to document the reason for the extension. So it could be a memo that you create and put in your files, simply stating that you the final guidance on the COVID-19 programs, and that's going to be sufficient to satisfy this requirement. The next slide shows extended due dates for various fiscal years through September 30, 2020, and that's important that the extension was given only to the organizations for the periods through September 30, 2020. Many of our clients fall into June 30, 2020 category with the normal due date, March 31st, and now extended to June 30, 2021. So remember, you must have COVID-19 funding in whatever form to be able to use this 3 months extension. Otherwise, you have to really comply with your normal due dates. So where you start your audit preparation, and that's not just single audit related, financial statement audit as well. You should really start with discussing relief funding with your auditors. As with the significant infusion of federal dollars, most likely your organization is a recipient of some sort of relief funding, whether it's a PPP, Paycheck Protection Program, or coronavirus relief program, or provider relief, or education stabilization funding. It is really critical that you identify this federal funding. And as we already know, PPP is not subject to the single audit. However, it is important to the financial statement and single audit process, as the expenses should be charged separately and cannot be charged to multiple funding sources, as David covered earlier in this presentation. So we auditors will be looking at the whole universe of your expenses to make sure that you identify and track PPP expenses separately, and we'll be verifying that there is no double dipping. Another important consideration if you have state and local government contracts agencies. So contracts with government, local and state agencies. You should know that coronavirus funding was passed through states and local government to the non-for-profits, and significant amount of coronavirus funding was passed this way. So if you have local and state government contracts, you should really confirm with your funding agencies to make sure you understand the source of the funding, as you might find out that the source have changed from the state local to actually federal funding. If you have additional funding to the existing federal programs, you might find yourself in a situation where previously you didn't really meet the threshold for the audit, which is $750,000, but with the additional COVID-19 funding, this funding may put you over the 750 threshold. So it is especially important to look at this if your original funding is below, and identify what is that additional funding and whether it's actually a federal related. So the next step in the process would be to put a list of government contracts, all your government contracts, identify your federal funding and related expenses. And it will help you determine first whether your organization is subject to the single audit. And second, if yes, then the amount of the expenses to be included on CAFA. Talking about CAFA, there are a number of challenges this year related to this COVID-19 funding. As you know, nothing is simple about COVID-19 funding. So you should be aware there are challenges around CAFA preparation. And you know that CAFA is actually required by the audit. So CAFA is required to be prepared by the auditee organization recipient of the funding. So with all this new funding received, there might be difficult to figure out what exactly needs to be included on CAFA. In some instances, it's not clear when the award actually happened. As you know, David mentioned already that some agencies provided cash first and then the awarding process occurred later. So what if the funds, let's say, received in the last months of the fiscal year with no communication, or communication coming after the year end? So in this case, do you include this award as part of your current year CAFA, or this will become the next year expenditure? So the general rule is the expenditures will be included where there is an award with terms and conditions and underlying activities occurred. So in some cases, it may be challenging to determine if there is an award, because you might not have a typical formal signed agreement as we used to see. In this time with COVID-19 funding, what happened, funds were released and then the awarding process occurred. So the awarding process a bit different and unique from what we know. In some cases, it might not be even a communication to the recipient. It could be simply a posting on the federal agency's website describing all the terms and conditions. So you really need to communicate with your awarding agencies and make sure that you gather all the available information about the funds that you administer. It could be an email exchange supporting your terms and conditions. It could be a website posting. Under normal circumstances, with auditors would not be accepting an email exchange as the formal award. But, you know, as I already mentioned, nothing is normal. right now, and that's the formal process that the federal agencies went through. And if there are terms and conditions on the website, definitely we're going to be using it as the reference for what compliance requirements your organization would have to follow if you have a particular finding. Another consideration here I have on this slide related to provider relief funding. This is very unique and different type of funding, allowing organization charge lost revenue on their CAFA as expenditures. The good news is if you are a recipient of this funding, you should not be included any expenses on your CAFA until December 31st, 2020 years and later. And this is done to align the required reporting of the Department of Health and Human Services. This is the agency that administers this funding. And the agency requires all the recipients to report back for the expenses, captured all the expenses as of December 31st, 2020. So that was a decision made to align CAFA reporting along with this required reporting to Department of Health and Human Services. Might be very different from what we used to, and definitely different from the gap recognition. But the good news, we still have a bit time to gather all the information regarding this program and to get a full understanding of how this program works. There are a few other CAFA considerations that I want to go over. Is that the COVID-19 funding should be presented separately on CAFA, and the next slide will demonstrate specifically how it is expected to be presented. Then the CAFA will include a footnote with an amount of donated PPE. So if your entity received donated personal protective equipment, the fair market value of this equipment should be included in a separate footnote. And another very important consideration is the CAFA completeness. As we talked about it, you really need to do your homework and prepare an accurate and complete CAFA. So you gotta start with the preparation of your government grant schedule. Like all government grants should be on that schedule. You identify your federal funding and identify expenses related to this federal funding. Reach out to funders to confirm if there is a COVID-19 funding added to your awards. Reach out to your state and local government agencies that you are working with to verify whether any federal funding was passed through to your organization. The last thing you want to do to miss some of the funding on your CAFA and have the audit done based on the wrong information that will result potentially in errors on the audit side, and we would have to redo your audit, or your funding agency, you know that the funding agencies are monitoring and reviewing CAFA, so you don't want them to reach out to you asking to modify CAFA, especially when you have your audit completed and finalized. And the next slide demonstrates this presentation, COVID-19 funding presentation on CAFA, where you need to identify it separately with the prefix COVID-19. And this includes both new and existing programs. So if, let's say, existing programs has an additional incremental COVID-19 funding, you will identify it separately. As shown here, you see the same CFDA number twice, a typical standard award plus COVID-19 stated separately. When it comes to internal control consideration, pandemic significantly impacted the way organizations operate. With changes to the work environment and entities going remotely, COVID-19 related changes, like some entities furlough employees and were forced to operate with less number of people at a smaller capacity, definitely responsibilities of employees shifted. It is highly unlikely that your organization operate in the same way that you did in the past. So we encourage you to review the changes in your practices and policies and have them documented in the formal policies and procedures, as the auditors will be testing your internal control over compliance. And whatever you document becomes the standard that the auditors are going to hold you to. There are a few points here on the slide actually related to the audit itself, and I put it here just for you to be aware of the extent of work what auditors go through. And if there are changes in your internal controls before pandemic and during, this might result in additional testing of internal controls. So we will be testing what controls that you have before and after. And if for some reason, let's say when you move to a remote environment, your control system changes and the procedures are not working in the same way and might not be relied upon, then it will result in the increased number of compliance testing. There are a few compliance considerations that I want to point out. Again, make sure you do your homework for the rules of the programs that you are administering. As with the existing programs with additional COVID-19 funding, there may be compliance requirements changes, and incremental funding might have unique compliance, unique and different from the compliance of your existing program. So even if it's the same program, COVID-19 funding might have something that different and something that you were not aware of. For the existing program with no additional funding, you should know that the federal agencies provided flexibilities and waivers to certain requirements. Again, you need to reach out to your federal agencies you're working with to identify those flexibilities and waivers. For example, U.S. Department of Agriculture, for those entities who run child nutrition program. So U.S. Department of Agriculture provided a number of waivers and flexibilities so the program could run uninterrupted during the pandemic. And they actually expect auditors not to test certain things. It's actually written down in the compliance supplement. And compliance supplement, it's like our Bible. This is the roadmap that we follow. It identifies all the requirements for various programs and the audit steps. So they do expect us not to do certain things as the waivers were provided to the organizations. So what do we do regarding the compliance consideration? As the recipient of the federal funding, we want to make sure we understand the compliance requirements changes, discuss the changes with the awarding agencies, and review federal guidance. There were, the guidance is on federal agencies' websites, there were memos issued, and frequently asked questions. In terms of the memos, just a second. In the effort to provide short-term relief for administrative, financial management, and audit requirements, OMB issued 4 memoranda that were directed to the federal agencies. So these memoranda instructed federal agencies that they can provide certain flexibilities to the recipients of funds. It is up to federal agencies to actually select specific areas that they provide relief to the recipient. So it is important, again, to do your homework and identify those changes, rule changes of the programs that you're administering to stay in compliance and avoid unnecessary compliance findings in your single audit. There is one memoranda that I want to actually spend a bit time talking about is the memorandum regarding the changes in the procurement. So the procurement thresholds were changed for the micro purchase from 3,500 to 10,000 and simplified acquisition threshold to 250,000, which is a great news. And we're gonna talk in a few next slides regarding procurement requirements. But here, what the last point I want to make is that grant recipients, you nonprofit organizations, should document changes in your internal procurement policies in terms of the implementation of these revised thresholds. And I want to provide a quick refresher of the procurement requirement. Is procurement definitely an area where our clients and non-for-profits in general still struggling with? And I'll provide a few points, few tips for you to consider to modify your policies and stay in compliance. So procurement standard applies directly to the charges. Applies to direct charges to federal awards. Doesn't apply to the general use expenditures charged to federal awards through indirect rate, and doesn't apply to the expenses of non-federal programs. Non-for-profits must use the following methodologies of procurement: micro purchase, small purchase, sealed bids, and competitive proposals. When it comes to micro purchase, those acquisition of supplies and services are less than $10,000. No competitive quotes are required as long as the price is deemed reasonable. For small purchases, those are purchases of supplies and services from $10,000 to $250,000, where rate quotes must be obtained from an adequate number of qualified sources. And an adequate number is not actually defined in the uniform guidance, but reasonably thinking it should be more than one. We would recommend 2 or 3. And in this case, quotes can be written, oral, or the online search engine could be used. For the sealed bids is a methodology that is preferable for the construction contracts. And competitive proposals, those when the sealed bids are not practical, you would use the competitive proposals where an RFP must be public and proposal must be solicited from an adequate number of qualified sources. And the price and other factors can be considered. So the price is not the only factor for the determination of who is going to be selected on this competitive process. One more methodology is available, but it has actually very limited use as the solicitation from only one source. And it can be used only in the following circumstances. If item is available from only one source, public emergency, or federal agency specifically authorizing you using one source, or after solicitation of number of sources, competition is determined to be inadequate. There is no formal documentation requirement for this methodology. However, to justify that only one source is available, we are recommending to include market analysis performed, where you would document that there are no alternative sources. In addition to the methodologies that we just reviewed, there are 5 standards to comply with. Uniform guidance requires policies and procedures to be established by non-for-profit organizations, and these policies must include requirements, process, controls, rules, responsibilities, methodologies used, And the common issues that we see with our clients and non-for-profits in general, that the policies and procedures are not really updated for the latest uniform guidance requirements. The question is, can an entity adopt a separate procurement policy for federal award? I'm sorry, and non-federal award? Yes. Uniform guidance applies only to federal awards. So as long as your internal controls are strong and the policies are followed, you can have multiple policies implemented. Your expenses might be necessary, not might be, I'm sorry, they must be necessary and reasonable and subject to open competition. Open competition, the procurement standard really calls for an open and free competition. So the federal government wants to make sure that you're making economic purchases. So if, let's say there is a quantity discount that can be obtained, you would really have to go for it. It is suggested to aggregate purchases even if portion of this purchase is not covered by federal award. Per uniform guidance, aggregating purchases should be used to obtain more economic purchase. And this should be part of your policies and procedures. Breaking out purchases in order to avoid threshold should be prohibited and documented in your policies and procedures. When it comes to conflict of interest policies, it is required again as a standard for procurement, and the conflict of interest policy should be acknowledged by the employees involved in the procurement process. And the last standard relates to the documentation. Documentation should be maintained to support procurement decision. And this is another area where we see that some of the non-for-profits are struggling with. So when it comes to testing procurements, we see that there is no sufficient documentation to support the history of procurement and the purchase decision made. So what constitutes sufficient documentation? So what level of the details that you need to have in place to support prices or quotes received? For acquisition, over a micro purchase threshold, over $10,000 threshold, it is recommended to have a log of rates, print out of a catalog, or a copy of a proposal. For most common purchases, it's between $10,000 and $250,000. It is recommended to have a supplier selection summary, especially if the lowest quote is not selected, as the price is not the only factor to consider. There could be other factors, so you definitely need to document what other factors you considered and why you didn't go with the lowest quote. For other methodologies like sealed bids and competitive proposal threshold, price analysis is required. So to comply with the documentation requirement, we suggest to create some standard tools and templates that your procurement team can utilize. Like, for example, it could be a supplier selection summary in the form of a checklist, or price cost analysis, purchase approval matrix with specified threshold, something to that extent. And one more point here on the procurement. Steps must be taken to ensure that minority-owned businesses and women's businesses, enterprises are used, except for the periods of granted flexibility due to COVID. Again, there were some flexibilities granted around the procurement requirements that you would have to really find out with your specific funding agencies, as not all agencies adopted those flexibilities. One more compliance requirement that I want to cover today is the subrecipient monitoring. As you might find yourself with the additional COVID-19 funding, that the funds that you receive from federal government would be passed through your organization to the subrecipient. And you should know as a pass-through entity, you have certain responsibilities and you must comply with the uniform guidance requirements around the subrecipient monitoring. So the first and most important item is making the correct determination as to whether you're passing funds through to a subrecipient or you actually making a payment to a contractor. Uniform guidance provides the definitions that are not really very helpful in terms of distinguishing between subrecipient and contractor. Like it says that a contractor is defined as an entity that receives a contract. Really not very useful, but what you should remember that regardless of whether you sign a contract, an award agreement, or you issue an award letter to your subrecipient, what's important is the essence of the relationship and the essence and the nature of the transaction itself. So underlying characteristics of the relationships, that what should support the determination of whether it is subrecipient or a contractor. Uniform guidance clearly states that a subaward may be provided through any form of legal agreement. Another important consideration here is to ensure that new requirements related to COVID-19 funding are included as part of your contract, and it is required for pass-through agencies to inform subrecipients of all the new requirements. As a pass-through agency, you are required to assess risk of non-compliance of your subrecipient and determine necessary monitoring activities. So pretty much perform the risk assessment and identify monitoring activities in response to the identified risk. As part of the risk assessment, here's the list of the procedures that you should consider, and is subrecipient prior award experience, prior audit experience, staffing and systems, and extent of any federal or pass-through monitoring. So the question is, let's say you go through the risk assessment and then you identify that subrecipient is the high-risk entity. Can you still pass the award to the subrecipient? And the answer is yes, but you should document the reason and implement more stringent monitoring procedures. Here's a list of other things that you're required to communicate to your subrecipients, and this includes the federal award IDs, the FDA number, the dollar amount of the award, the name of the federal agencies, and distinguishing any incremental COVID-19 awards from the regular funding. You're required to identify all requirements imposed by federal entities. Those are related to the single audit and uniform guidance, and you're required to identify any additional requirements imposed by the pass-through entity, which is either state or local agencies or your entity as you're passing through the funds. When it comes to the monitoring procedures, as you can see, there are lots of things here that you are required to do. And the most important is you're required to review financial and programmatic reports of your subrecipients, as well as operational and financial controls that the organization has in place to ensure effective management of the program. If the recipient is reaching the threshold for the single audit, which is $750,000, you are required to make sure that the audit is performed. And if there are any findings on that audit, you are required to monitor or to make sure that you perform a follow-up and the agency is actually acting on the finding and have corrective action plans in place. In general, subrecipient is responsible for effective management of the program, and not-for-profit agencies that are passing through funds are responsible to monitor that effective management. There are a few other things here is that you as the pass-through entity will be responsible for considering whether the audit results and other factors impact your pass-through entity's records. Let's say there were some disallowances and you might disallowances on the subrecipient's end, and you might need to make certain adjustments to your books and records, and consider whether enforcement actions are necessary if subrecipients are not following the requirements. And with this, I'm turning back to David.